G'day, what's happening, boys and girls? Miguel, Crypto Al, Lex Leone, Sean McGibbon. How are ya? I thought I'd jump on because I saw Bitcoin was breaking or attempting to break through a very critical level here. Brandy, what's happening, Brandy? Love Seattle, the Seattle sound. All right, let me just post to Twitter and through Discord as well about the live stream, because some people like to basically catch the stream from those notifications. So I'll be with you in just a second while I post that up. Hey, I'll just say I am live. Few kangaroo icons. Tweets out and Discord. YouTube. Go, that should do it. Everyone should be notified. So let me just go back here a step. And we'll check out what's happening on Bitcoin. So if I go out to the daily, you can see on the daily, if we zoom right out and get the price action around 30K, that sort of consolidation range that we were stuck in at the start of the year, or in May, there were some peaks, couple of peaks there, which produced a trend line, a downward sloping trend line. We tagged it here basically to the dollar. We did a bit of a fake out here, so we came up and tested it, and inevitably we got rejected by it. So this orange trend line is quite significant, and it's proving to be difficult to break above it. The reason I turned the stream on was because it looks like we might be popping up through it at the moment. So now the other thing, which is even more significant than that, if I go out to the weekly chart, you can see the all-time high for Bitcoin at $69,000, right? If we start a trend line from there and trace it to the March high of, what's that, $48,000 roughly, that produces another more macro level trend line. You can all, yeah, I mean, you can go back onto the daily and see it as well. But yeah, getting over that was very significant. And you probably noticed in the last stream, I covered that trend line as well. So we broke it, finally. It's been basically over a year since we've been trading underneath it. So if I go back out to the 4-hour chart, let me just turn the music down a touch. You can see that we back tested that trend line as well. So price broke out through it, found resistance on the orange trend, rallied down again or pulled back down again, and found support on that 69K trend line. Came up, tagged the orange trend line, got rejected once again, came back, found support on the $20,000 support resistance line. We all know that the $20,000 line is very significant for Bitcoin. And it looks like we're finally getting that, potentially. I don't want to call it too soon because we've still got, it's only like 4.5 minutes left of this hourly candle, but it's looking good so far. So we might be getting our break now. The next hour will be, pretty telling as to what's going to happen for the following candles. But it is off to a really good start. We're 55 minutes into the new daily candle. We're about to get that first hour close of the day, and yeah, that's pretty much all there is to say about Bitcoin at the moment. It's looking good. We're about, well, for me, we're 4 days out from a full moon. If you're a full moon type trader, if you believe that there's some kind of validity to the lunar cycle and markets, I think there is. I think there's something to it. It's not perfect, but it's, the effect of it happens often enough to where it's worth having a look at, I think. Coley, what's up? So let's see. This was a really positive sign. So we had a low, we had a lower low, and then from that lower low, we got another macro higher low. Like, yes, all these were higher lows as well, but this retest here came in a little deeper, which is why this dotted line is the support structure trend line. So that was a really good signal that, the foundation was rising up. We were improving our foundation to lift us to at least break through these trend lines here. And, we saw this coming. Like, you can probably go back to, at least 5 streams ago or more. We were watching this apex building up. So here's the apex here. Or if you're using the orange line, it's somewhere in that neighborhood there. So expecting a break either up or down. My bias was more to the upside just because we have not yet got in a lower price than this low here that we got back in June. We've come close, but, whenever price gets roughly close to that low, it gets bought up so quick. Like, if you pay attention to the $20,000 line, let's make it pink and like really wide, just so you can really see it. If you pay attention to that, you can see that most of our price action has been spent on top of the 20K support line, right? Whenever a dip has happened, it gets bought up very quickly. Very quick, very quick. Even this dip, this was spent at the support and then the dip happened, but was recovered quite quickly within, 4 or 5 days. So, and then, yeah, this period that we've just come out of, this sideways market, this was basically what I think the bears trying their best to try and drive price down to try and beat these lows here. But the demand is, meeting that supply and, basically shoving us sideways. So there's a bit of a price equilibrium going on here, which to me says that crypto is actually holding up better in the last 3 months than the stock market. The stock market is getting hammered. Reason being is that crypto fell first, right? We've already come down like all the way from up here. It's come down like 74%. And yes, isn't it amazing that with how negative the macroeconomic scene is like at the moment, the whole environment worldwide is very bleak, very negative right now. And yet we've only corrected 74%. That's a shallow correction in crypto terminology, right? We've barely even come down to, well, it's let's call it 74%. So look at previous cycles from their all-time highs. So if we grab the 2017 all-time high of 20,000, it didn't actually quite make it to 20,000 on this chart, but we'll take it from there. If you go down to the very bottom, that's basically an 84%. So we've pulled up 10% more shallow this time around than the previous bear market. So that's something to pay attention to, and I think it's a sign that crypto is starting to strengthen. The foundation of it, the market floor is raising up, and it's basically getting healthier and healthier, so that every correction that comes by is not as severe. I'm not saying that the bottom's in by any means, and yes, we could fall. And a lot of people are saying that we're going to fall to 14k, 12k, 10k, and I'll believe it when I see it. But for now, I just think there's a good signs that things are, we've quite possibly seen the bottom. I think that's definitely reasonable to suggest that that could have been the bottom. I think 17,600. So I could don't get mad if I'm wrong, because it could happen. I could be wrong, but yeah, I'm just gonna go out on a limb and say it. I think the bottom's in. If I'm wrong, so be it. I'll buy more. It's not a problem. Let's measure this correction in 2019. So this came from 14,000, and we got a correction down to 3,800. So that was another significant correction. That was a 72%. I might have to go to an older chart, so something that has a bit more history on it, because this only goes back to August 2017. Might have to go to the Bitstamp chart, because Bitstamp's been around a lot longer than Binance. And then failing that, I can go to the BLX chart, which is this one here, which has the entire history. All right, let's go to the monthly, just because it's a bit easier to measure off bigger candles. All right, so we all know that our existing correction is about 74%, right? The 2017 correction, that went 84. Yeah. What other corrections have we got going on here? Well, there's definitely this one here from 2014 or 13. So the all-time high back here in 2013, corrected down 85%. So that's probably the most significant correction, almost 86%. And then, back here, this is before exchanges existed. This was maybe Mt. Gox days. I'm not sure when Mt. Gox started, but anyway, this correction would have been pretty big, I think. Yeah, 93% from the top of the wick down to the bottom. So Bitcoin going from a high of $31.90 back down to basically $2, $2.01. So yeah, over time, well, that's the most significant correction. This is the second one. I think this was what, 90 something? Oh no, that was not even. It was 75. This one's significant, I think. This is the bigger one. 85. Yeah. So they are getting less severe, maybe, potentially here. This is where I got involved in crypto. That was what attracted me to this space. And that was the 84%. So yeah, roughly 84, 85% is the running theme. And then this correction 74. But just because previous cycles have corrected 85, 84% doesn't mean this one has to. There's not some hard set rule. It's just a gauge to say, oh, it can go down this low. But that hasn't happened. If things get a lot worse, potentially that's when we see the flush down to 14,000. But to me, it seems like there's evidence that potentially people are running into crypto to weather the storm of their local currency. So if you're British and your pound's getting hammered, your wealth would have been better stored in Bitcoin during that downturn, and then maybe buying your pounds back, say, like, let's say today, or once Bitcoin goes up a little more, buying your pounds back. That would be one way to protect your wealth. Scott, what's happening, man? Brian, Crypto Fanatic 69. I'm doing well, thank you. So, Crypto Fanatic 69 is asking about Fibonacci. So, let's do a bit of that. So, there's two directions for a Fibonacci retracement. You basically draw it from your high. So I'll circle the high here to use it as an example, to your pullback, your low. So that coming back up to your high, your first point, from your second point, basically it's a journey, and you're measuring how price is retracing back to the first spot. That's basically what a retracement is. You're retracing your steps back. So to do a Fibonacci retracement, to measure a move back up, the whole point of it is to see what's going to act as resistance as you head back up to the first position. So, and then I'll show you the alternative to that as well, which is the support side of things. But anyway, so if we're heading back up to 1, which is 32,399, you pull it from the first point and you drag it down to the lowest point. So that gives you the extremes of the range. And then these beautiful little Fibonacci levels present themselves. And you can see that at each level, it can prove to be, to act as resistance, and definitely in a big way. At the 0.5 Fib retracement level, Bitcoin struggled to get above that. So that's the 25K range there. And then once again, we reapproached the 382 Fib level, but that proved to be too much of a resistance again. So we've been shoved all the way back down, almost to a full leg down to the starting point, right? So right now we have to re-attack the 0.236, which is the first Fib level, second Fib level here, the third, the fourth and most popular or strongest influence Fibonacci level, the 0.618. That may prove to be quite difficult as we attempt to head back up to our home base here of 32,400. So that's basically Fibonacci from a resistance perspective as you're trying to go up, right? So from a support perspective, I'll show you the variation on that, and that's in the other direction, right? Let me get rid of these lines. So I'll delete this fib. Let me get rid of these levels as well. Okay, that makes it a bit cleaner. All right, so let's say we're crashing, right? And we're looking for where the hell are we gonna pull up? Well, you need a low and a high. So let's go out to the weekly just so I can really pinpoint the spots. Let's use the COVID low to the all-time high. And we'll see if there's been any activity on the Fibonacci points. And yeah, there is a bit. There's a couple of spots here that are significant, I think. So traveling back to the COVID low, which is, let's say that's where we're attempting to get, right? Which is $3,782. You can see there was significant support produced at the 0.5 fib level. So there was, a bounce off that range there. There was also support provided here at 28,600. And then we've actually retraced to check out where the 786 is, Fibonacci level. Let me hide some of these lines so you can really see it. Get rid of the macro trend lines. Might have to actually just turn everything off here. And then we can really see it. I'll leave that on. I'm gonna hide the 2022 low, but check out where Bitcoin found support, smack bang on it, almost to like the dollar. Look at that, it is so close. I'll circle it so you can really see it, right? That wick down almost perfectly found support at the 786. It came down just a tiny little bit, a couple of dollars, right? So you could have put a pretty amazing buy in at 17,738 and it would have been filled because that wick goes ever so slightly below. So that's a good measure, right, of where the market found support. So we've looked at resistance and we've looked at support, fib retracements. And I think, yeah, they're definitely significant. They bear significance to what's going on. Another really interesting thing that I found this morning was, what's kind of like a bleak outlook on the market. What could happen? What could still play out on the negative side of things? And that is something like a repeat of the 27 or the 2018 bear market. So if we I'm going to grab the bars from this area. Let's go from here and just trace it out past the bottom of the market. Let's bring it back up to here like this. Okay. So that's pretty much a replica of the bear market from 2018 into 2019 recovery. If we bring that across to the current time and basically line it up, so we'll have to stretch it a little bit just so it fits. Might have to stretch it out quite wide actually, just so it fits that hump. But yeah, you can see what I'm getting at here. Now, remember, fractals aren't a perfect copy. Like, things aren't going to play out exactly the same way, ever, right? Because of, many varying factors of markets and what's happening around the world. So If we play out anywhere close to this fractal, it kind of implies that we're going to get diminishing relief rallies as time goes by. Like all through next year could be quite flat and boring with Bitcoin. And then we might get like a final washout down to $14,000 before finally recovering and getting the pump we were looking for, back up to 30,000. But yeah, that's just one way to look at what might happen and what a bear market looks like. Now, I guess the true difference here is the time frame. So we've already spent so much time correcting off the all-time high, right? So let's do a different one. Let's do something that's a bit more fair to the time frame, right? So if we're taking a duplicate of the all-time high, we'll have to blow it up a bit to basically account for the fact that we've come up way higher than that previous all-time high. The price action's a little different. Let's see, something like, wait a minute, I'm time stretching it. I don't want to time stretch it, I just want to price stretch. So I don't want to affect the time frame. I'll just make sure I haven't altered that too much. Yeah, that's looking a bit better. Is that a copy? Okay, there we go. So I only want to adjust the vertical axis. I don't want to play around with the time stretch. So there we go. That's an identical replica of the last bear cycle. So we just want to do a price stretch, not a time stretch. So that's vertical only. I'll try to do it. It's very hard to keep the mouse going perfectly straight up, but there we go. Something like that, right? So you could argue that we may be approaching the bottom here, or if not, we've already seen it come in. The other point is that some people call this as the true top. So this was just a false move up, right? This was a rally that came off the back of much weaker movement in the market. You can see that by the RSI on the weekly, I think it was, the weekly. Yeah, check it out. So this was the true top in strength, right? Up here. And even this push wasn't that, wasn't anything compared to the initial push to 42,000. So yeah, some people call this whole structure, because of the whole Wyckoff accumulation thing that happened, we had this really strange double top market rather than a blow off top, just like this market back here. So that may have an effect on the time frame. But if you pull this back to, say, just, let's give it an average in the middle of these two highs, that lands it somewhere in here, right? If we were to get a blow off top market rather than a Wyckoff, that puts the bottom in roughly where we've been, trading the last couple of months. So pretty interesting as far as fractals go. Anyway, that's fractals. I think the funny thing with fractals is you can grab examples from basically any point in time to fit your bias. Like if you're a bear, you can pull a fractal from any part of the market which was bearish and basically stretch it and warp it to fit your paradigm or to fit your outlook, right? And the same is true for a bull. Like someone that's bullish, they can pull something from a previous bull cycle and say, yeah, look, we're about to do this because of this. Like a good example is this part. So this would be pulling a bullish fractal just for this, for the sake of it, of explanation. So there's the match there, right? I could suggest that, if I warp it the right way, that yeah, we're getting another bottom, just like we did last year here, right? And I can stretch it in such a way that suggests that we're going to head to $55,000, early next year. So yeah, you can pretty much pull fractals from wherever you want and stretch it to your opinion, I think. But that's why I suppose you got to be. You can't lend too much importance or significance to fractals. It's just one way to say this is how it's played out in the past during a bear market. This might happen, and that's about as far as you can take it. Let's see if I can bring back some of these trend lines as well. Delete the fractal stuff. I'll lock these away. What that vertical line's all about. If I have time, could I show Elliott wave? I'm not really that strong of an Elliott wave analyst, really. There's a lot of channels out there that would do a much better job than what I could do. But yeah, Elliott waves are all about a 5-wave impulse, and then you can get ABC corrections off the back of that. You can even get a 5-wave correction off a 5-wave impulse as well. So yeah, there's a lot to it, and there's so many different variations, but essentially it's you get an impulsive move, you get the first correction, you get the second impulsive move, which is a lot longer and bigger than the first move, right? And then you get another correction. Now, the correction off the third wave, so basically 0.4, can't come in lower than 0.1, if that makes sense. So this would be invalidated. This wouldn't be an Elliott wave. This, however, would be, because the pullback is higher than the initial first wave, right? And then the way to basically set up the targets for Elliott wave is by using a Fibonacci extension tool. So you'll see me adjust this to fit the explanation, but the gist of it is you start with your low of 2. So this is basically to try and target where wave 5 is going to go. So you start from 2, you bring it up to the top of wave 3, and then you pull it back to wave 4, and you're targeting a 1-to-1 Fibonacci extension. So wave 5, if it went to a 1-to-1 extension, would be up here. That's a wave 5. So another popular spot to take profit off Fibonacci extension is at the 0.618, which would be back down here. So, and that is I think that's a more common target. But yeah, some people do, if it's looking like a very bullish move, it can go up to a 1-to-1 extension. But more commonly, the 0.618 extension is where targets get met. So let's see if there's any examples of a 1-to-1 extension happening. or sorry, even just a 618, 0.618 extension. I just want a nice, obvious, clean example of it. So we want a low, a high, and then a pullback. So maybe in here. This is maybe a good example. We'll see where it actually hits. So if we take the low here, take it to a high here, and then to the pullback here, this actually goes well beyond. But you can see here, like, why did it stop here? And that was a 0.618 target hit. So that was a hit. A 1-to-1 extension hit was here, where it wicked up and touched. That was a hit. And then even beyond that, this was a 1.618 hit. So that was another target that got hit. So this was a very bullish move off that initial structure. Basically starting point, high, and then pullback. So you're basically measuring how far something can go when it finds support off that. So that's Fibonacci extension. And you use that to basically forecast your targets when you're using Elliott wave theory. Let's see if there's anything we can do with the existing price action. So we've got a low, a high, and then a pullback. So let's try and do a fib extension off that. So low, high, and then pullback here. And this is like to the point. This is snapped onto the tip of the wick. So a 618 extension would take us to 20,690. A more bullish target, 21,284 up here. And then a 1618, 22,245. So that's basically fib extensions. You can see it's dealing with the first level, the 382. Well, the first level technically was $20,096, which is the 236. But we've already, we smashed through that to begin with. So, yes. Oh, Brian, what about EGLD? Yes, amen. Let's have a look at EGLD. Elrond. EGLD. There it is. Go down to the daily. It's double bottom, to tell you that. It's pretty damn good. Look at that. It's pretty much like Bitcoin, how it's come in with a higher low actually. So that's actually a I think that's a bullish sign. Hey, just like back here, check this out. See, it's set in a low and then a higher low. So that was like a sign that there was positive moves to come. And then it ripped up. So yeah, hang in there, I reckon, if you're still in that EGLD trade. Especially if Bitcoin starts to move positively in the coming days or weeks. But yeah, this is looking real nice. At least for some kind of like push to the previous high there of like $69, $70, right? I don't know, man. Your call is as good as mine. It's hard to say. Bitcoin. Look at that. It's all wicks. So it's teasing still. Still have not broken above this orange line. It's all wicks. So when we get candle body closes on top of this orange line and we start building candles, you know, that go above each other like this, that's when, you know, it's a bit more sustained and it's a more real breakout. Just like here, you know, initially this was like just a tease, like, oh yeah, it failed, like it wicked out and then it failed, but it started getting candle closes outside, which was a good thing. And then the real telling fact was that it back tested and then built candles off the back test. Yeah, I'm subconsciously drawing something here that I don't mean to be drawing. Sorry about that. So yeah, the back test, the bounce. It's like we're trading. We're stuck between these two trend lines here for the moment, and we're trying to figure out what's going to hold, what's going to break. So maybe we do come down for another retest of that trend line and then come up again and then break out, you know? Who knows? Guess we'll just have to wait and see. Wrong tool. Let me go back to same settings as before. Yeah, this music, I don't think it's Erica Badu. It should be in the description for the stream. It should have the music. Yeah, the playlist can be found there. So there's a link to it. I'll post it in the chat as well, just so you have it there. That's the playlist. Anyway, I think I've pretty much covered what I was coming on here to talk about, which was the potential break of this orange line, this trend line. Haven't got it yet, so I'll have to keep watching. Maybe in a few hours it'll break. It is Eric Badu. Okay. All right. Well, thanks for tuning in, boys and girls, and I'll catch you on the next stream. It'll probably be more around the candle close, like the daily close, but yeah, this one was a bit of a late stream today. All right. Thanks for tuning in and have a good one. Take care. Catch you on the next one. Bye.